All right, what's going on, everybody? Tremaine here. I'm going to do a quick trade breakdown from Asia last night. Okay, this is Monday, December 16th, 2024. So we dropped down. Okay, as you can see, we are well beneath our current new day opening gap. Okay, that's your closing price at 5 p.m. and your opening price at 6 New York local time. So we trade down, taking out the sell side. Okay, the ATM model rules state that you want to see your lowest low between 6 p.m. and 7 p.m. taken out. Well, if we draw that out, 6 p.m. and 7 p.m. here, okay, your initial sell side is this low here. But if you notice, we didn't take that out. We have this long wick, okay? Wicks are gaps. Whenever we have a long wick like this, but the bodies are relatively staying in the same spot, I'm looking at the bodies as far as sell side, okay? The wicks are the lowest piece of price action. It's the most minuscule piece of price action, okay? The bulk of the volume lies in the bodies of the candles. So while a lot of people may have been waiting for this low to get taken out in order to look for longs, okay, I'm seeing this as we've already dropped down and taken out sell side because this is the long, obnoxious wick. I'm looking at the bodies because they're all staying here, and the bulk of the volume is in the bodies. All right, so a lot of people ask, why did you go long even though we didn't take out initial sell side? In my eyes, we did take out initial sell side by trading to the rejection block, which is this closing price. The lowest closing price in this swing low is your rejection block. So it looks like this. No editing here. Rejection block. All right. So we trade down into the rejection block here, rally up, all these clean highs, way too smooth, way too clean. We clean that up, trade down once more, okay, clearing out the sell side underneath this low, trading once more into the rejection block. Unwilling to trade and take out this low, to me that's bullish. Okay, NASDAQ is showing an unwillingness to take out this low, but we have traded to the rejection block and wicks are gaps, so you want to get midpoint. Trading to consequent encroachment of the wick. If we're bullish, if we're expecting higher prices, which I was, looking for a repricing to our current new day opening gap, okay, if you're bullish, you don't want to see the lower half of PD arrays traded to. Well, this wick, I'm seeing that as a normal fair value gap. It's a gap. Do we trade to the lower half? No. We're leaving majority of this wick open, okay, working in the upper half, and we've taken out sell side, and we've already traded to the rejection block here. We rally up, take out a short-term high. Let's go ahead and clear this off for a second. Okay, short-term high, this is your 2022 model. Okay, trade up, inversion fair value gap, this SIBI. We're not looking for that as a short. Okay, our draw and our focus is up here. Okay, inversion fair value gap, and inside that inversion fair value gap, you have this BISI, buy side imbalance, sell side inefficiency. We tap that, hit consequent encroachment beautifully. To the tick, trade up, 3 or 4 rather consecutive down close candles. That is one bullish order block. Okay, that's one consecutive order block from this candle's high to that down close candle's low. We close above it, next candle opens, trades down, trades up, candle opens right at the high of it, and then we rally. Clearing out the buy side, we have consequent encroachment of this wick, trade down, the body's respecting it, and then your new day opening gap is tagged there. My entry, okay, this is my preferred entry. I was out shopping and whatnot, got to the charts a little late, but this is the entry I would have liked inside the inversion fair value gap using the buy side imbalance, sell side inefficiency. Okay, I didn't get to the charts in time. Instead, using the bullish order block as entry, again, these 4 down close candles, we trade up. This candlestick's high that starts the order block comes in at 97.75. My entry, 98.5. So I tried to mark it, time it when it was hitting the high. 3 ticks off, no big deal. Trades up, Okay, yes, we cleared out buy side, but I'm only long one contract and I'm holding for our current new day opening gap low. Trade down, constant encroachment of the wick, spikes up. The low of the new day opening gap comes in at 111.75. My exit, 111.5. Okay, you have to account for the spread. You don't want to set your limit order right at the low of the new day opening gap, because a lot of times what it'll do is it'll hit the low to the tick and it'll retrace. Okay, so you want to account for the spread, so giving it one tick, so making sure I get that guaranteed exit. And that's pretty much the business. Okay, nothing crazy, simple bread and butter. This is the ideal entry, sell side taken. Okay, once that happens, we're looking for buy side, and we're looking for our current new day opening gap as a draw. Order block entry, new day opening gap exit. Hopefully this was helpful. Full access members in the Discord, we're back live trading tomorrow at 9:30. I'll see y'all there. Love y'all. Be safe. Peace.